Chapter 11, Lesson 1, Part 1. Take your highlighter. Sri Lanka Accounting and Auditing Standards Act number 15 of 1995. Now we are going to study about this act. What's the purpose of this act? It says that recommendations of the accounting standards have to be followed in preparation and the presentation of financial statements of a specified business enterprise. Okay. Now it says that it's compulsory to follow accounting standards in preparation and presentation both. Under this act, there are 3 committees or institutions introduced in Chapter 11. First one, Sri Lanka Accounting Standards Committee. It has been formed under the Act of Sri Lanka Accounting and Auditing Standards Act number 15 of 1995. Okay. What's the duty of this committee? It assists the ICASL, Institute of Chartered Accountants of Sri Lanka, to prepare and recommend Sri Lanka accounting standards. Okay, now first of all the act, name of the act, and the first committee is Sri Lanka Accounting Standards Committee. Okay, the main duty of the committee, it assists ICASL to prepare and recommend Sri Lanka accounting standards. Okay, second committee, Sri Lanka Accounting and Auditing Standards Monitoring Board. It also has been established under the same Act, Sri Lanka Accounting and Auditing Standards Act number 15 of 1995. It has the power to examine whether the Sri Lanka accounting standards have been adhered into preparation of accounting statements of a specific business enterprise and to take necessary actions if the standards have not been adhered to. What's the meaning? They are going to check whether all the companies are following these accounting standards. If not, they are going to make necessary actions. That's the second committee. Third institution, that's ICASL, Institute of Chartered Accountants of Sri Lanka. It also has been established under this Act, Sri Lanka Accounting and Auditing Standards Act number 15 of 1995. Okay, now again we are coming to the summary. Act number, Sri Lanka Accounting and Auditing Standards Act number 15 of 1995, and there are 3 institutions. Remember the name of the committee or the institution and the main duty of the committee or the institution. Chapter 11, Lesson 1, Part 2. ICASL. ICASL means Institute of Chartered Accountants of Sri Lanka. What's the main objective? The objective is to regulate the auditing and accounting profession in Sri Lanka. The main objective of ICASL is to regulate accounting and auditing profession in Sri Lanka. Then functions of ICASL. Number 1, organizing exams. In order to provide related qualifications and relevant educational courses. Okay. The famous exam they conduct is Chartered Accountancy exam. Number 2, control and supervise students' education and training. 3, promote resources on accounting and related subjects. Develop, maintain and revise accounting standards. Those are the main 4 duties of ICASL. You need to remember these 4 that might be tested for Part 1 paper. Then accounting standards. What do you mean by an accounting standard? It is a selected set of accounting policies or broad guidelines regarding the principles and methods to be chosen out of several alternatives. When you are going to keep accounts for a certain figure, there might be 2, 3, 4 accounting treatments. If accountants keep records as they wish, the comparability will be very less. So accounting standards will be providing guidelines in the selection of accounting policies or guidelines out of several alternatives. For example, when you are going to value your inventories, you have many methods to value, like FIFO method, first in first out method, last in first out method, weighted average cost method, simple average cost method, like that. So from LKAs to inventories, the accounting standards guide you to value your inventories under first in first out method or weighted average cost method only. Okay, from out of several alternatives, accounting standards will be providing guidelines to select the selected set of accounting policies or guidelines. Then, objective of accounting standards. The main objective is to reduce the diverse accounting policies and practices and to maintain uniformity and high standard of financial reporting. The objective of accounting standards is to reduce variations and enhance the uniformity. Advantages of accounting standards. Number 1, reduce variations. Number 2, provide more disclosures. Number 3, it provides the basis for comparison. Next one, disadvantages of accounting standards. Number 1, it provides restrictions on choice. Accountants can't keep accounts as they wish. There is a guideline. Number 2, standards cannot override the statute. The law comes first, then the standard. Number 3, rigidity. What do you mean by rigidity? It's very strict. Okay, you have to follow them. Chapter 11, Lesson 1, Part 3. Conceptual framework for financial reporting. Okay. Look at the diagram. First layer, objectives. Second layer, qualitative characteristics and elements. Third layer, measurements and recognition of elements. Okay, now we'll take them one by one. Number 1, objectives of financial statements. What's the main objective of a general purpose financial statement? It is to provide financial information about the reporting entity that is useful to existing and potential investors. What do you mean by existing and potential investors? Current investors and future investors. They might be studying your annual report now. Okay. So those are potential investors, lenders and other creditors in making decisions about providing resources of the entity. Then the next layer, qualitative characteristics of financial information. Now, qualitative characteristics will be divided into main two parts, fundamental and enhancing. Put a star there. This is very, very important. Basic characteristics and extra. Advanced characteristics. Okay. Fundamental characteristics. There are two, relevance and faithful representation. Enhancing characteristics. There are four, comparability, verifiability, timeliness and understandability. Okay, now we are going to study them one by one. Number 1, relevance. What do you mean by relevance? It is the quality of ability to make a difference in decisions made by users. Ability to make a difference in decisions. Now these days you will be watching news 2 or 3 times per day. Why? What's the reason? You need to know about the situation of COVID-19 in Sri Lanka. Okay, because that will make differences in your decisions. So that's what you meant by relevance. Ability to make a difference in a decision. It has 3 subparts: predictive value, confirmatory value and materiality. You can write down those 3 sub-characteristics under relevance. Then faithful representation. What do you mean by faithful representation? Economic phenomena represented in financial reports should be faithfully presented. Faithfully presented. You can keep your trust on the financial statements. It consists of completeness and neutrality. Okay, you can write down those 2 also in that diagram under faithful representation. Then we are moving to enhancing characteristics. Advanced characteristics. Number 1, comparability. Ability to compare. If data of a company can be compared with similar information about other entities and with similar information of the same entity for another period is known as comparability. Okay, horizontal comparability and vertical comparability. With inside your business for several periods you can compare your performance, or with some other businesses for a specific period. Okay, verifiability. It helps to assure users that information faithfully represents the economic phenomena. Timeliness. It is the quality of having information available to decision makers in time. Okay. Understandability. Ability to understand. The quality of presenting information clearly and concisely, which is understandable by the user without using professional jargon. Elements of financial statements. There are 5 basic elements. Those are assets, liabilities, income, expenses and equity. We have done those 5 elements in detail in chapter 2. Please refer your chapter 2 notes. Then recognition of elements. That's very important. Put a star there. Following criteria to be used in recognizing elements. Okay. Number 1, relevant information about the asset or liability and about any resulting income, expense or changes in equity. Number 2, a faithful representation of the asset or liability and about any resulting income, expense or changes in equity. Okay, relevant and it should be relevant and faithfully represented. Okay, next topic. Measurement of the elements of financial statements. Following methods can be used to measure the elements of financial statements. Previously, we had 4. Now we have 2. The main 2 measurement methods are number 1, historical cost, and number 2, current value. Under current value, you have three sub measuring methods. Number 1, fair value. Number 2, value in use for assets and fulfillment value for liabilities. Number 3, current cost. The last two topics, recognition of elements and measurement of the elements of financial statements, those two topics are very new to the syllabus. Okay, it has been changed with effect from January 2020. So these parts will be having a very high probability to be tested in the A-level exam.